Hey everybody, welcome to the live stream, the Cressivo live stream, where I come here on YouTube every weekday, 12 o'clock Pacific, and go through all kinds of stuff regarding options trading, selling options to create yourself income on a regular basis, weekly income. It's a great opportunity for you guys to join me and ask questions. Ask questions in the chat. Watch my live trades, not just put them on or find them, but manage them. And I wanted to go over that today. It's important that you guys understand that, we're not just setting it and forgetting it, right? So trading options is kind of like active in the sense that, oftentimes we sell a put and then maybe the stock, goes higher. And sometimes we buy our put back to take the risk off the table. So it's not set it and forget it. It's not that hard. So once you get the hang of it, once you understand the concepts of selling puts and selling covered calls, typically it takes, 20 minutes a day. You're not looking at computer screens all day. You're not doing that. But that said, you do sometimes have to focus. Actually, you always have to focus on risk. And the reason why we want to sometimes buy our contracts back is to capitalize and lock in that gain and then move on and take all that risk off the table. So I'm going to show you guys what I'm talking about. Now, if you're new here, welcome to the channel. This is a great channel where we talk all about selling options to change your lifestyle, creating income. Gone are the days where, man, I want to buy some stock because I think that stock is going to go up. And then I just sit around waiting, hoping, praying for it to go up. And I'm not able to use any of that cash. That is a broken system. Trading stocks and not trading options is a broken system, guaranteed. And the only people that do that are people who, for some reason, can't wrap their head around options trading. But it's not that hard. Two strategies you need to know. Sell a put. You find a good quality stock that you're okay buying. You like the company. And selling a put, what you're doing is you're basically insuring someone else's stock. Someone else has 100 shares of Tesla and they don't want to lose all their money if the stock crashes. So they want to buy insurance, right? So they buy insurance, they pay premium to you, you sell that, and you're saying, hey, I'll buy your Tesla if it crashes. Cool. I like the stock. You're going to pay me either way. I'm going to keep the premium no matter what happens, just like car insurance. When you guys pay for car insurance, if you don't get into an accident, the insurance company doesn't refund any of your premium, right? They keep it, right? This is the same thing. So you're paid a premium to commit to buy stock that you like anyway if the stock crashes. If it doesn't crash, you don't buy the shares. Either way, you keep the cash. What's the worst case scenario that happens when I sell a put on a stock that I like? Worst case, the stock goes down and I buy that stock cheaper than where it's trading today. It's like a no-lose situation. And as long as you keep your risk in check, it is so easy to make money. It's harder not to lose it, so that's why you have to keep your risk in check, and that's why what we're talking about right now is buying our contract back. So I'm going to show you guys an example. Let me know in the chat if you guys have questions. We're going to go, I have a hard stop at 12:30. I really got to maintain my schedule lately because I got a lot of things that I'm taking care of, and I want to make sure that they get done, right? Okay, so let me show you guys exactly what I'm talking about. Here is an SMCI put that I had sold, I don't know, a few days ago or whatever that was, and I made 16 bucks for it, so 0.16. Again, when we sell a put, this is what this means. I'm promising to buy 100 shares if the stock drops below 21 bucks before it expires on the 24th, which is this Friday. If it doesn't drop, I don't buy the shares. Either way, I keep the cash. Right now, because SMCI is up 21%, stocks go up, the value of my put goes down, right? So I can actually close that position because now it's only trading for $1. Now you have one of two choices. You can either wait until it expires on the 24th, and it will probably expire worthless, and take all the money, keep the whole $16, right? But if you wanted to be a little bit more risk conscious, you can just give $1 back to the market and take that risk off the table. That's so much better. So I'm going to show you guys how to do that. I have my thing connected here, so I'm just gonna like put the trade in automatically. Let's see, short put right here. I'm just gonna click on it. I'm gonna buy it back for $1, and I am going to, let's see, $1, 0 bid, $1 ask, submit my order, and then I should be able to see it momentarily. So a lot of times there's no right or wrong with this, but it is better. My view is it's better to lock in small incremental gains as I go, because it's just safer that way. Again, it's easy to make money and it's harder not to lose it. Why would I keep that risk open for $1? Like, okay, I'll just give $1 back to the market and I take the risk off the table. That's so much better, right? So that should, let me just refresh this. That should be gone. Okay, so that's gone. So let's go through some of my stuff here. These are my positions, right? So I have these 100 shares of AVGO, right? I bought them, oh my gosh, for $477. I think this was yesterday. I sold a call that's going to expire today, right? I got paid $68. Now, I sold a $400 call, which is lower than my basis. And the reason I did that is because I just got tired of sitting around waiting. Now, the risk is when you sell a covered call that's lower than your basis, you have to be prepared for those shares to be called away. So right now, AVGO is up almost 3%, right? So it's kind of like a big chunk. It's trading at $398, so it's pretty close to my strike price. I'm just gonna play it by ear. I'm gonna be okay selling those shares at 400, and if that happens, I'm gonna end up taking a capital loss, right? Because I have this $7,000 loss. This position is In reality, it's too big for this portfolio anyway. It's only a $100,000 account, and it's almost a $400 ticker. So it's really not consistent with the size that I should be trading. I had this conversation earlier this morning with somebody. Here's how we want to trade. We don't want to incur realized losses, right? Because realized losses hit our pocket. But sometimes when we recognize that we're in a trade that maybe we shouldn't be in or something like that, sometimes that's going to happen. This is not about like, perfection or whatever. This is about kind of just going with the flow and learning as you go. And sometimes that does happen. So either way, I'm going to be fine with it. It's going to expire today, pretty soon, because there's only like another hour to go before the market closes. So I don't know. We'll see. Let's see what else I got. I got this HPQ shares right here, and this call that's up a bit today. SpaceX, right? So I have these 100 SpaceX shares that I bought for $159. Actually, I bought them for $170 because I sold a call and I got assigned on those shares, and that's how I ended up with those shares. And remember, when we sell a put, did I say call or put? Man, today my brain is going like a million miles a minute. I've been mixing up call and put. I don't want to confuse you guys. I sold a put and I got assigned those shares. So I ended up buying those at $170, but my cost basis came down to a little bit under $160 because your basis will adjust for the premium that you get. Now SpaceX is down a lot, right? When you have shares, you have to think this. I sold that put initially. I traded that ticker initially because I like that ticker. You have to commit. When you like that ticker, you got to go like all in, and you have to be thinking, okay, I like this ticker long term. Even if it drops, I'm not going to like dislike the ticker. I still like the ticker. Listen, things drop for lots of different reasons. It doesn't really matter why. Usually there's nothing fundamentally different from the company. It's just lower in value. So if I like that stock at 160, man, I should like it at 117, right? So as long as you have the money, you should sell another put. I'm going to show you guys how that works. Now this account, I started using this account as like a cash account, right? Because I wanted to show you guys being a cash secured account, you have to have, let's say if I sold a 120 put, you have to have $12,000 in your account to back up that trade, to buy those shares if the price dips, right? But technically, this is a margin account. So I could make this trade because I have plenty of money. And also, when I look at my, let's see, let me close some of these things so I have some space on the page here. These are just like all old orders that I had in there before. Let's see this right here. I mean, I have, let's see, live sync. I have no margin concern right now at this moment for this account because it's kind of, I'm managing it pretty conservatively. I don't have a lot of things in here. So I'm okay selling a put on SpaceX. So we're just going to do it. Let's do it now. I'm going to sell a put. I'm just going to click sell a put here. And it's going to pull up the first strike underneath where the contract is trading, where the price is trading, where the stock is trading. And I can change that. And this pulls up. This is very dynamic where it pulls up my information. So I'm already long 100 shares and at this price, 159. And if I was to, let's say, sell a 117 put, we see that here, that's going to put my new average basis here. It does a lot of things that just helps us make smarter choices and be more efficient with our trading, right? And then it kind of shows us, oh my gosh, what kind of rate of return would I make? Well, if I sell something really close to where it's trading, I'm going to make more money, right? Because there's more risk that you have to buy the shares. That's why we see this big number here. But I don't want to trade something super close to where it's trading. I want to trade something far away. And what I do is I look at the delta. So the delta is like the statistical likelihood it's going to drop there before it expires. So I'm going to look at maybe like a 10 delta. So there's only a 10% likelihood, right? So SpaceX right now is, where's that trading? 117 per share, we see here. So if I sold a 106 put, right, it's pretty far away. It's got to drop 9%, before Friday to require me to buy those shares. So it's pretty conservative, right? So I'm paid $45, and here's how much cash you have to put up if you have to put up all the money. Although you can use margin. I'm just going to put this trade in because here's the thing. Like, again, if I like SpaceX at $150 a share, bro, I like it at $106 a share as well. It's the same company, right? And if I had to buy those shares at that new price, now I'm going to have 200 shares at a lower average cost basis. It's going to come down to 132, like we can see here. So I'm just going to put this trade in. It's a great annualized rate of return. And we're going to manage it together on this live stream, right? So let's just do that. So it's 45, or actually now it's 50 bid. So I'm going to change this to 0.5, and I'm going to put it here. I'm going to submit the order. Now, my app, this is my app that I'm walking through. So the app that you guys have access to, you're not able to actually send the trade to your broker-dealer. I'm doing that now and showing you because I'm testing that. That's coming soon. I'm making a lot of enhancements every day, actually, on this app. So that will be here soon. You don't have to use that functionality, but you will be able to use that functionality. My intention is to have one place that covers the whole options journey, right? I can find the trade, I can put the trade in, right? Execute the trade, I can manage the trade, look at it, see my positions, what if I did this, what if I did this? I could see my cost basis, my transactions, all that stuff under one place to make it easier for you to do that. Instead of having, I don't know, two different pieces that you're flipping screens. I do that now. I flip one screen to another. It's not that efficient. So that's coming. So anyway, let's see if that position got filled, which it should have. So I'm just gonna resync this just to make sure the connection's good. And let's take a look. Sometimes it takes a minute to show up. So we're just gonna wait a moment. Let me pull up. I have your comments right here beside me. Greg Ratowski, new here. Welcome to the channel, brother. So this channel, just since you're new here, I'll just give you a quick synopsis. The channel in general, Cressivo, is all about using options to sell premium, to create cash flow for yourself, typically on a weekly basis. I like to make money every week. Why every week? I mean, why would I choose to make money every month when you can make money every week? I want to spend money this week. That's why. And these live streams are all about walking through an actual account and showing you guys step by step. So all the tools here on this channel help you ultimately be more successful, and really it comes down to the gist of changing your lifestyle. Being able to do what you want when you want to do it. So welcome. ET Phone Home, love that name, by the way. I know I say that every time I read that name. I had submitted a long call instead of selling the call. Earnings next week, so hoping between now and prior to earnings, hoping I can close with a small credit. So did you do that by accident or did you do that intentionally? I'm confused by what you're saying. So there's two ways, especially for those of you who might be new here. We can buy options or we can sell options, right? So buying options, you pay a premium, and you can perhaps, let's say, buy an option for $100, and if you're right about the direction, you can turn that 100 into 1,000 or something. Kind of like if I go to the mini mart, 7-Eleven, I can buy a scratch ticket. I can pay $1. I don't know what they're going for. I haven't bought a scratch ticket, man. Like, I used to do that back in the day when I didn't know any better. Like maybe I don't even know, 20 years old or something like that. It's been a long time. Because why? The reason is, you pay $1, you pay $5, and you could make 10,000, but the likelihood of doing that is so small. And when we're selling options for premium, when we're trying to create cash flow for our lifestyle, it's not about guessing directionally. I don't know where the market's going to go, bro. I don't know. SpaceX goes up, SpaceX goes down. I have no idea. Nobody knows, nobody, and I don't pretend to know. I just want to make money no matter what happens. So ET Phone Home says he did it by accident. That's common. Listen, I think I mentioned this the other day, and if I didn't, I'm going to mention it again. When you guys subscribe to the app here, you can sync your broker dealer. So you go to the settings page, and you can go down here, and you can connect a brokerage, right? So you can whoever you have, right? So you can, if you have Schwab, if you have Fidelity, if you have Robinhood, if you have E-Trade, all the big broker dealers are there. And the advantage of that is not just for you to pay attention and be able to see your stuff easier and manage your stuff, but sometimes I go through the app users because I want to provide value wherever I can. And the other day I saw an app user who did that on 23 contracts. So if you did it on one contract, that's okay. Sometimes we make mistakes. I do that too. And I've been trading a really long time, 29 years in fact. And sometimes I buy something instead of sell it, or I've sold 10 contracts instead of one contract. We make mistakes sometimes. So this guy, he had bought 23 contracts instead of sell 23 contracts. They were calls, and he didn't even know it. And I sent him an email, and I was like, "Hey, just FYI, I'm not sure if you did this, intentionally, but it looks like it was probably accidental." And he was like, "Yeah, fat fingers," I think is what he said. Yeah, so I encourage you guys, you don't necessarily. So ET Phone Home, this is a good thing. You don't necessarily have to wait. I had this other conversation with somebody else this morning who has a whole bunch of crap in her portfolio, one account, for lack of another word, just old stuff that was from a long time ago. Hey, I bought 5 shares of this and 10 shares of that, and she was waiting until it pops up, so it's green, sell it and not lose money. And I'm going to tell you, ET Phone Home, what I told her this morning. Sometimes we don't want to lose money and we don't want to take a realized loss. But sometimes what we do is we recognize, you know what, that's a trade I shouldn't have made. Let me just buy it back now, or let me sell it or liquidate it, flatten out that position and take whatever that loss is. And sometimes it's better that way, right? So for example, with that guy with the 23 contracts, he was initially saying, oh, I'll just, kind of what you're saying here, I'll just wait and, maybe I'll break it even. You can, let me show you some functionality on the app here. You can go into the scenario simulator and say, okay, let's say I did this with Oracle. You can say, okay, well, if Oracle goes up, I don't know, 10%, where does that put, I don't have an Oracle call. Let me do it on a call that I do have. Let's see, let me go back. And you can do it across the board like this, negative or positive, or you can do it ticker by ticker. So for example, I have that HPQ $27 call. So you can say, okay, well, let's say HPQ goes up 10%. So you can kind of get an idea on where that the price of that contract is going to go based on a hypothetical scenario. So I would encourage you to use that. I would encourage you not to say, well, let me, earnings, maybe I'll make my money back. Because the fact is, when you buy a call, you spend that money, most options expire worthless. As time goes on, the value is going to drop just by the time alone. And I would encourage you to perhaps not just wait and see what happens, but maybe just sell it and take the loss, or calculate, what happens if it goes up, X percent. And then it helps you make a smarter decision instead of just like, hey, whatever, like, let me throw a dart at the board. Hopefully that helps. Melissa McCurdy says, hi, Michelle. I have a call in on BE, so Bloom Energy, for 220 expiration, July 31. It paid over $3,000. Good job, sister. It is now selling at 223, and a put is now paying 3,200. Should I get out early? Let me see. So let's look at Bloom Energy. I'm going to look here in Schwab just so I can see it better. Bloom Energy, BE. And by the way, I'm happy to kind of talk through, like, hey, here's what I suggest or whatever. But I want to be clear with everybody here watching. I'm not an investment advisor. I'm not giving you like specific recommendations. My job is to just take the 29 years that I've been trading, and I that's what I've been doing. That's all I do is options, and I'm really good at it, and help you kind of talk through things. Ultimately, it's your decision, your money, your decision. I'm just trying to help, right, the best I can. So Bloom Energy. 225 a share right now. Let me read your message again. I have a call in on Bloom Energy for 220 expiration on July 31. So here's the thing. So if you have a 220 call on July 31, and right now it's trading at 225, you can do one of a couple of things. You can wait until it expires, or you can calculate, okay, like if I bought my call back, I'd probably lose some money because the stock went up. But if the stock went up, let me calculate what the net result is. If I bought my call back, lost money, and then also sold my shares, I highly encourage, I think I recognize your name if I'm not mistaken, and I think you're an app user if I'm not mistaken, but you want to connect your broker-dealer, or you want to upload your CSV files, because then you could just click into the app, like your positions right here, and there's a module called Analyze, Liquidate, or Wait, and you can do it manually if you want to. It's over here. So if you go to the left-hand side under the calculators, it's here. And when you do it manually, it's kind of a pain in the neck. You got to type in all this stuff. If you have your positions synced in your app, in your dashboard, then you just click the button and it pulls it all up for you. But basically, you would just type this stuff in here, Bloom Energy, and fetch the data, and let's say, okay, it's 724, and I think you said you have a 220 strike price, if I'm not mistaken. So you're going to type that in, and then you're going to say, okay, I have 100 shares, and your average cost basis per share, I don't think you told me in this message, but let's say you paid $2.19 a share, like whatever it is, you're going to put that in here. And then how much did you get paid when you sold the call? I think you said you got paid $3,000. So that's a lot of money. So that's 30 right here for the price. And then you're going to calculate it, right? And this does, and again, if you have your positions, it's even better because you just click a button. But this will show you, okay, if I just liquidate it now, if I bought my call back and then sold my shares, what's my net going to be? Or if I wait until Friday, and let the shares be called away, assuming the stock stays high. How much am I going to make? So usually if you liquidate early, you're not going to make as much money, but it's all about risk, people. Listen, if I can lock in a $2,000 gain right now and take that risk off the table, so I don't have to wait a couple of days. It depends. I'm not looking at your actual positions, but you're going to use this module here to help you make smarter decisions. By the way, guys, I changed the pricing a little bit. I went back to a 7-day free trial. Now that's only applicable for people that never had a free trial. So in the past, I've had, believe it or not, I've had people like try to get free trials multiple times. So we don't do that, right? Because that's kind of like shady anyway. If you never had a free trial, you can get a 7-day free trial of this app. So you can check it out, walk through it, see if you like it. And then if you like it, it just pay as you go, like, month to month, $129 a month. And it pays for itself over time. Like if you're trading a couple $1,000 and you're paying $100 on an app, it's going to help you make smarter decisions and use tools like that we're walking through for Melissa here. Michael Corey says, Doc Mike, Dr. Mike. I don't know what that means. Doc Mike here, and yeah, I already know. I forgot my laptop. I'm not sure what that means. But hey, what's up, Dr. Mike? That's cool. Clifford says, how about Interactive Brokers? Yeah, bro. Interactive Brokers is here too. I assume you're asking about connecting your broker-dealer. And listen, as you guys walk through this app, sometimes, because this app is fairly new and I'm making enhancements every day, I'm making it better and better. Man, there is so much value in this app. It's not even funny. Just not even just helping you find a trade, but manage it. And not just help you make money, but not lose your money. That's the most important thing. So yeah, here's Interactive Brokers. So you can connect that. After you subscribe, if you run into something, hey, I'm not sure how this works, or hey, how do I do this? Send me an email. I'm very interactive with my people. I'm very close with them. And then also on Saturday mornings, we have office hours, 9 a.m. every Saturday. For app subscribers, we kind of walk through all of these things. So yeah, Interactive Brokers is on there. ET Phone Home. BTC should be less than your premium if you want a credit. Buy to close. So buy to close should be less than your premium if you want a credit. I don't know if that's a question, but yes, you're correct. You're accurate there. Melissa McCurdy says expiration 7/31. Oh, sorry, I walked through 7/24. But you're gonna do the same thing that I just did there on that liquidate or wait page. And again, sync your stuff, because first of all, when you sync your stuff, then I see it. And if I see something, I'm not saying I guarantee to notice something and then reach out to somebody, but I have done that a lot. There was an app user that sold she did a debit spread by accident instead of a credit spread. She didn't realize it, and I sent her an email. The guy with the 23 contracts. There was another guy that had long Tesla shares, but he wasn't sure to call. And I sent him a text. He's a mentee, so I with mentorship clients, I usually text people back and forth. It's just easier. And I sent him a text, and I was like, "Hey man, sell a call on Tesla. What are you waiting for?" And then he did it. And it was like $500, but it was helping him. Like had he not realized it, then he misses out on $500 in premium. So I highly suggest syncing your stuff, and it's super safe. It's read only, so there's no write capability, no nothing like that. Let's see. Thank you. Bloom Energy earnings July 28th. It will be highly volatile. Yeah, listen, I went through this yesterday, and I'm going to go through it again because it's valuable. There's a spot here for earnings edge, right? ET Phone Home, you're always here. I think you're not an app subscriber, bro. You gotta get to be an app subscriber, because then you can see all this stuff that I'm talking about. You're very active in the community, and that's great. This is gonna propel your trading. So if you use the earnings edge, you can either screen for upcoming earnings, but you can also just type the ticker in. I did this the other day. And this shows you earnings is July 28th. Now it is volatile, right? So the market expects a 31% move, maybe up, maybe down, who the heck knows. But this app helps you quantify these things so you make smarter decisions. And then, hey, even if it goes down 31%, if I was to sell a put, here's a strike price to choose because it's below where the market anticipates. And then here's how much capital I need. Here's, my annualized rate of return. You can use this tool to help you make smart decisions. So yeah, hopefully that's helpful. Oh my gosh, 12:29 already. Man, these sessions fly by. Is this helpful? Does this help you guys walking through this every day? My intention is that, here's the thing. Like Wall Street and I don't know, like I'll say Wall Street. They have people like bamboozled thinking that you gotta or you should like use a financial advisor or put your money in this goofy mutual fund or whatever. It's because they make money from that. But the fact is that people can take control of their own destiny and not make this like, hey, I'm gonna be happy if I get 10% return on my investment. No, you can make 30%, and there's no guarantee. So I'm not here saying you will do this or you will do that. There's still risk in the market. Maybe you lose all your money. You gotta know what you're doing and you gotta make the right choices. But like selling options, not only can you create way more money than like just sticking your money in some, S&P ETF, but also more importantly, you lock those gains in. Listen, this account that I started, how much have I started? I don't know, since I started $5,200. That's cash in my pocket that no matter what happens, I'm not going to ever give back to the market, right? So it's important. So if you, I'm going to leave with a couple of just final things because we're going to wrap this up at 12:30. Number one, thank you, obviously, for your attention. A couple of things. If you want to check out this app, you're just going to go to apps.cressivo.com, and you're going to go here. And if you never had a free trial, just sign up 7 days for free and check it out and see if you like it. It's amazing. There's lots and lots of functionality. All these, helping you find a trade, your positions, your realized gains, your trade journal, helping you manage the trade, all these calculators, and the office hours. And if you want one-on-one help, just go to my website. I don't work with a lot of people because I don't have that much time, right? Go to my website and go to mentorship and then check on one-on-one mentorship. And there's a few things if you want to apply. It just like walks you through some screens, like, asking you some questions. And then that comes to me in an email, and then I can reach out from there. Mentorship is meant to pay for itself in multiples. I have people that paid $5,000 that have now made almost $15,000 in the last 30 days. Again, there's no guarantee and that kind of thing. But that's what mentorship is meant for. It's meant, and that's what the app is meant for. And actually it's interesting, like somebody said to me yesterday, and this was so good, like it's not an app subscription, it's like a business. It's like once you learn how to sell options, it is like creating your own little mini business to create cash flow ongoing. Like where can you create a business without any money down and for $129 a month? Where can you? It's not a thing. So yeah, anyway, hopefully that helps. Yeah, so I'm gonna wrap it up 12:33. I gotta stay on track with my schedule lately. Man, I got a lot of things to do. Thank you for coming here, and come back tomorrow, 12 o'clock. Check out my videos. I'm back on board like a video every day, and I batched a whole bunch of them the other day, 8 of them. So they're gonna come out daily. And reach out if I can help in any other ways. So in the meantime, have a blessed day, make it a great one, and happy trading.